Tarang, we can start now.
Okay, Aisha. Good evening.
Hello.
Good evening, everyone. On behalf of HDFC Securities, I welcome you all for this session on weekly FNO outlook. Firstly, along with me, we have Ed, who will give us the weekly FNO outlook on the market. So before starting, we'll brief you the flow for today. Mr. Devarsh Vakil will give you the outlook for the market. Last week, Mr. Devarsh provided us a very nice view that 15,800, 900 for Nifty is a very strong support. And if it holds, then we may see a sharp bounce back, which actually happened. So anyone traded on that view would have been profitable as of now. So being tomorrow also being a weekly expiry, so this will help us, the view what Mr. Devarsh sir will give us will help us to take the expiry view that is for tomorrow's trading session. And post that also we'll brief you about certain features which we have recently launched, like margin calculator, wherein the user can calculate option trading strategy margin at their fingertips. And post that we'll open this forum for Q&A session. So without wasting any time, I will hand over to Mr. Devarsh Vakil to brief us about the weekly FNO outlook. Over to you, sir.
Thank you, Tarang. I welcome all of you to this webinar. So let's straight away jump into the content. We have seen the short covering in Nifty futures during the first 4 days of this weekly expiry, expiry being tomorrow on 21st of July. So where we have seen about 7% fall in open interest and the Nifty has risen by 4%. Similarly, the long build-up is seen in the Nifty futures, where we have seen the long build-up in Bank Nifty futures during the first 4 days of the weekly expiry, 8% rise in UI, and Bank Nifty has also risen 4%. So as we have pointed out in our last webinar, the FIs were quite short and they were due for short covering, and that's what we have been seeing. Now we are seeing a lot of divergence in the market. From 16,200 to 16,500, all strikes have been written in the put side. So traders are confident that markets are, even if they were to go down, they will not go down much, and they have written put across the expiry of tomorrow, 200, 300, 400 and 500. On the call side, we see that the 16,500 and 16,600 and 16,700, 2 strikes, calls have been written. So we can expect the Nifty to expire around 16,500 levels, which is the close today, 16,492 to 16,520. If international cues are weak, and we saw some kind of a selling in last 1 hour today, so that suggests that there is some amount of selling is pending. If market were to come down to a level of 16,350 to 16,400, then for tomorrow's expiry you can go long. Let's see what weekly expiry levels are there. 16,400 to 500 can act as a strong support for tomorrow, and 16,600 to 700 could be the resistance for tomorrow. Let's see what FIs are doing. So as we pointed out on July 4th, they had extreme short positions and gradually they have started covering. Then from 8 to 14, they again shorted the market, and in last 4 days, gradual short covering we are seeing in the positions by the foreign institutional or foreign portfolio investors. So Nifty have risen nicely, and here also FIs are gradually covering their shorts, but they are still quite short compared to the historical data. So if international markets continue to do well and Indian markets respond with the positive earnings, then we can expect furthermore very short, very large amount of short covering to come into the market still. Why I'm saying that? Because we will have in next 3-4 sessions till weekend, some large large index stocks are going to announce results like ICICI Bank, Infosys and others. And now those results, if they are up to market expectation or better, then they may force traders to cover their shorts. Let's see what is the outlook. So as I pointed out last time, the stop loss should now need to be increased from 15,800, which we mentioned last time, to now 16,200. So overall, we remain bullish. Overall, stop loss should be now 16,200, and for tomorrow, we have seen puts around 16,400. So if tomorrow market were to come down to 16,400, 16,350, you can create long position for tomorrow. For overall expiry, create long position with the stop loss of 16,200. Similarly, for Bank Nifty, we have seen 30,000, 35,000 to 35,500 puts being written. 35,900 is the maximum pain point for tomorrow's expiry. So it should expire around 36,000 to 35,900 levels. And if we come down to these levels around 500, 550, then you can 35,000 to 30,500 levels. At that levels, you can create long position with a 35,000 stop loss for the overall expiry. So overall, we remain bullish. There is a possibility of a short covering at a higher level, provided international cues are positive and we get some good quarterly results from companies like ICICI Bank and Infosys, which are due over the next 3-4 days. Overall, remain long with 16,200 and 35,000 stop losses, 16,200 for Nifty and 35,000 for Bank Nifty. We will keep reviewing these levels and we will keep trailing these levels. As and when market goes up, we will keep raising this stop loss and carry our long positions forward. So that's what I wanted to share. Over to you, Tarang, for explaining the features.
Yeah, thank you, sir. Now we'll just share with you some of the features which we have recently launched. That is the F&O margin calculator, which you can see on our HDFC Securities website. Now, calculating margin is very much easy because once you trade any kind of an option trading strategy, it is very much necessary for you all to first understand how much margin is required, and then post that you will be able to understand that how much margin is there, and based upon that you can trade on this strategy. So Devarsh sir, can you please make me a presenter so that I can share my screen?
Go ahead, Tarang.
Yeah, thank you. So once you log in into hdfcsecurities.com, so once you log into hdfcsecurities.com, under products, you will be able to see derivative. Under derivatives, there is an option called as margin calculator. So once you click on margin calculator, here based upon the strategy, based upon the leg that is in the options or in futures, once you add all of the legs which you want to do as a strategy, the system will show it to you how much margin is required. So let us understand now. Suppose if anyone wants to create a bull call spread, that is buying 16,500 call option and selling 16,700 call option. So how much margin is required? Suppose you want to trade in tomorrow's expiry. So let us understand. So first you have to select option index, then select Nifty, the expiry which you want to create the position. Suppose I want to create the position for tomorrow's expiry. So I will select 21st July. Lot size, I want to buy 16,500 call option. How many lots? So one lot. Total quantity is 50 shares. The premium will automatically populate over here. And once I click on add, that particular leg will get displayed over here. Now I want to sell 16,700 call option of same expiry. So I will select 16,700 call option over here. The premium is there. I will click on sell instead of buy. I want to sell this leg of 16,700. Then click on add, and once I submit, I will get how much margin is required. So this is the total margin required to take this to initiate this strategy. Around 16,520 rupees is required to initiate this strategy, and this much amount of margin benefits you will be getting it. So here, by this, if you want to do any kind of a strategy like fly, or if you want to do a put hedge strategy like you want to buy Nifty future and simultaneously buy put option, then also you can do it. Let us see how. Now take an example of Bank Nifty. Now if you want to buy Bank Nifty future and simultaneously to hedge your position, you want to buy slightly in the money put option or at the money put option. Let us see how you can do it. How much margin is required. So here Bank Nifty, select the expiry for suppose of 28th July. I want to buy, so I will click on add, and simultaneously I want to buy 35,900 put option to hedge. So I will select option index. I want to buy for 28th July expiry, so I will select 28th July, and I will select 35,900, sorry, put option. So I will select put option, and here 35,900 strike price. So it's 390 premium I want to buy, so I will click on add. Once I click on add, I'll click on submit. So around 44,000 of rupees of margin is required to buy one lot of Bank Nifty future and simultaneously one 35,900 put option. So this is how basically so easy. If you want to trade, you can trade from here itself by clicking on buy. It will ask you to log in. Once you log in with your credentials, it will directly will be able to directly place the order. You will be also able to see the payoff graph over here. So at what level your profit and loss will be started, how much profit you will be getting it if Bank Nifty goes into your favor, at what level how much profit has been you will be getting it, that all will be you can see in this graph. If you're not able to if you're not comfortable seeing the graph, there is also a table which is there where you can see how much profit you can earn at what level if the Bank Nifty expires on 28th July. So here with the payoff chart, payoff table, you will be able to see the margin details also. So it's very simpler to basically calculate margin with our margin calculator. So I hope this feature will help you on your day-to-day derivative trading. Now that's it from our end. Now we'll just open this forum for question and answer section. If anyone has any kind of questions, we'll request you to please write on the Q&A box, which is there in the right hand side of it, and we'll reply you back with all your queries. So one question we have got is how to see open interest in HDFC securities by Mr. Dinesh. So Mr. Dinesh, if you have access to Pro Terminal, which is our advanced trading portal, in that you can get an access to basically open interest. So this is the Pro Terminal. So suppose you want to see an open interest for Nifty. So just click on Nifty, just type Nifty and Nifty July future, suppose. So here you will be able to see what is the open interest, how much open interest I've got added, and also you will be able to see what kind of a position I've got developed. So this is the open interest breakup. So here you will be able to see how much open interest is there for which series. And also if you want to see for a different strike price, that is option open interest. So here you can see the option open interest chart also. So this is our advanced trading portal. In Pro Terminal, you can get to see this. This Pro Terminal, if you have a derivative privilege, you can opt for our derivative value plan 199. In that, not only you will get an access to Pro Terminal, free access to Pro Terminal, but also you'll get an ₹20 per order brokerage plan too. So Mr. Suresh is asking, is there any possibility for multiple legs in same time for option? I didn't got your question, Mr. Suresh. If you are talking about that, you want to find margin of the same option multiple legs, and that you can do it. You are asking how to execute multiple leg options position in same time. So we have basically a basket order. Mr. Suresh, I will just give you a brief about our basket order. So once you log in into hdfcsecurities.com, once you log in into it with all your credentials, so there is an option under equity. There is an option called as basket order. So once you create your basket, whichever leg you want to basically buy or sell the option, so based upon that, you can do it, and you can place the multiple leg order in one single order book. So under equity, there is an option called as basket order. So here you need to first create your basket. Suppose you want to create a basket for Nifty bull call spread, which we discussed, at buying 16,500 call and simultaneously selling 16,700 calls. So here select derivative, select option index, under it for underlying Nifty, select the expiry for tomorrow's expiry. Suppose I want to buy 16,500 call option at a price, suppose at 55 rupees. I will click on add order, and simultaneously I want to sell 16,700 call option. So here I will select 16,700 call option and I want to sell. So I will click on sell. Suppose I want to sell at 4 rupees. I will click on add order. Once I click on this, I will have to save my basket. My basket has been successfully saved. I'll click on OK. Then I will go on place order basket. I will select both the leg and I will click on place the order. Since the market is not open, I won't be able to place the order. But once I place this order, my both the leg would be executed and would be actually are ready to go into the to place into the market. And once the prices matches, my order will get executed. So this is the benefit of basket orders, where you can place multiple leg order in one single window.
So Tarang, there is one more question on how to access the Pro Terminal. Can you just send that link to everybody?
Yeah, surely. So we'll just share the link.
Right. By the time Tarang sends you links, there are the question which I did. So at what stage we have to make a payment or for the option? So once your trader is executed, then only you will be charged for checking the prices, like what Tarang did right now, or try to make a basket. Mr. Sanjay, you don't get any charges for that. Pratik Mehta is asking, if you want to learn about future and options on our website, we have a lot of trading material. On our YouTube channel, on HDFC Securities YouTube channel, we have a lot of videos and webinars, and these previous conference call webinars which we have done. There is plenty of material available. You just please go to our HDFC Securities YouTube channel and search for derivative webinars and derivative trainings that you will be able to get. Suresh is thanking us. Yeah, go ahead.
Yes. So yeah, sir. Thank you. So we have forwarded you the link of how to subscribe to our derivative value plan. But make sure before subscribing to our derivative value plan, you have an derivative privilege with you, because then only derivative value plan will be subscribed. So I have.
Tarang, are you there? So Pratik and Sanjay are thanking us, and Suresh is asking about e-margin. So just like derivatives, in e-margin, you can create a position and carry it forward. There you do not have to pay the margin, but there you can actually cover it in the cash market stocks also. The derivatives stocks are limited. In e-margin, we have more than 400, 500 stocks where you can take a cash market deliveries and keep it for a longer term by paying 30 to 50% margin. Remaining amount HDFC Securities pay, and you pay a small amount of interest on it. So that's a e-margin product. If you want to learn more about e-margin, you go to our website and there you will be able to learn more about it. If you have any specific question, you can write to us and we'll be more than happy to tell you. All right. I think that brings us to the end of the webinar. Yeah.
Yeah, sir. Yeah, thank you. Shall we conclude?
Yeah, we can conclude.
Okay. Yeah, thank you all for attending this session. I hope it will be useful. The view which Mr. Devarsh provided would be useful for the next week and also for tomorrow's expiry. And thank you, Devarsh, for providing us the view. We'll meet you next week for the next week expiry. Until that time, thank you all and have a nice trading journey. Thank you.